So no introduction needed for today. We have the Fed FOMC meeting, and when Jerome gets up on the microphone, I'm sure we're going to see a lot of volatility. This is also a huge day for global markets generally, and especially risk assets such as cryptocurrencies. So the outcome from today's meeting will in all likelihood set the tone for risk assets and the global environment over the next few months, such as the power of the Fed at this moment in time on the macroeconomic situation. Plus also some big news out of Polygon Matic concerning YouTube, and we'll also take a little look at the Bitcoin chart. So let's jump straight on in here. Of course, subscribe if you're new and all of that good stuff. No major shill. Today, 2:30 p.m. ET, which is Eastern Time, Chair Powell hosts a live FOMC press conference. So that is 7:30 p.m. UTC for my European viewers. And I'm sure a lot of us are going to be absolutely glued watching this to see what exactly comes from it. There's going to be huge volatility around this event. I wouldn't go watching the 1-minute chart for Bitcoin unless you're an absolute savage. But the importance of this can't be understated. We've got massively split opinion for the first time that I've seen in a while between people who are into macro. On the one side, we're seeing macro analysts who are of the opinion risk assets are going to be totally blown out here over the next few months. And then on the flip side, the likes of Raoul Pal, Dan Tapiero suggest that the Fed can't actually raise rates all that much and that digital assets have sold off way too much. So everything up for contention. A lot of polls going on Twitter right now. Pretty much down the line, 50-50 on bullish versus bearish, hawkish versus dovish. So this from Darius Dale, an excellent follow. Go and give him a follow on Twitter and on YouTube. Green on the screen to post Microsoft's numbers yesterday. Things to watch around the FOMC today. Number one is how the market trades into the close for today. Number two is timing and pace of quantitative tightening. So that's going to be very interesting. Is this coming towards mid to late 2022? Are they going to suggest exactly how much they're going to start tapering by? A lot of key questions. And number three, whether there is actual risk of a 50 basis point hike throughout the meetings ahead. Again, some people suggest 25 basis points is the max they can go to without really crippling things here. And others are suggesting 50 is well on the table. So plenty up for debate here. In terms of Microsoft, yesterday they had their earnings call and they actually beat their earnings. So if we just go down here, you can see Microsoft actually ended the day minus 2.66%. They reported a second quarter earnings of $18.8 billion or $2.48 per share, up from $2.03 a year ago. Revenue jumped to $51.7 billion from $43 billion, and analysts were calling for $2.32 per share and $50.7 billion. So they did manage to actually beat their earnings, but shares actually fell 6% in after hours trading following the release of the results. They then reversed to a gain of 1.2% after the CFO shared Microsoft's forecast in a conference call later in the afternoon. So they've obviously done very well over this period of lockdown due to the fact people are upgrading their equipment, utilizing the cloud more and more. And so we had record sales in cloud storage. Now, as we're seeing the high correlation between stocks and crypto and in general all risk assets, well, this is an interesting table to look at here. This shows the earnings calls anticipated over the rest of this month. So later on today, after Jerome's speech, we have the earnings call of Tesla. We just had Microsoft, we got Tesla today, and then Apple tomorrow. So of course, these three companies make up a huge percentage share of the stock market and really do dominate the S&P 500. So it is important for the markets in general that these earnings calls are good, and we don't really want to see signs of weakness around this. If these stocks can post decent numbers, maybe we have a little bit of a dovish tone to Jerome's talk, well, maybe we're in for a little bit of relief extended here for the next few weeks or even months. And I'm sure we will all be very pleased to see something like that after just a relentless down-only market since December. So plenty going on in the financial world here and a lot to keep on top of. Here, Matthew Hyland has tagged all the FOMC meetings on the Bitcoin chart. This is not for any drawing of conclusions, just to provide the data here. We can see going back to January of 2021, FOMC meeting, and we had a bullish uptick. In March, pretty much sideways chop. April, initial pump and then dump. June, again, a bit of down only and sideways action. July up, September up, November sideways and down. And of course, December has been down only since then. So this is from HSBC. I thought this was quite interesting to look at just what their preview is for today's meeting. They expect the FOMC to signal at its 26th January meeting that a rate hike is likely at its 16th of March meeting. So no immediate hike expected from these guys. I think if there's an immediate hike today, this will be very bad for the markets, but it seems most analysts do not believe that will happen. They go on here, the FOMC is likely to announce a final month of net asset purchases totaling $30 billion. That will run from mid-February to mid-March, and we also expect the FOMC to leave the federal funds target rate unchanged at 0 to 0.25%. While no new economic or rate projections will be presented, the policy statement could include an important adjustment to forward guidance on the federal funds rate, and they expect this to solidify the market expectation that the first increase in policy rates will be around 15th and 16th of March. They're personally expecting 3 rate hikes of 25 basis points, March, June, and September, and 2 more in 2023. And in a recent interview with Fed Governor Christopher Waller, conducted on the 13th of January, they showed that 3 25 basis point rate hikes is still a good baseline for what to expect from Fed policy this year. So this gives you an idea of what one of the biggest banks in the world are expecting. So anything shy of these projections here, maybe they come out with 2 rate hikes they intend to proceed with, that would be real bull case here and would spark continuation of a relief rally. And then some major news here from YouTube/Polygon. So Ryan Wyatt, who was lead for gaming over on YouTube, has now announced he is leaving YouTube to take up a role as the CEO of Polygon Studios. So he's thanking everyone for the memories in here, but this is super exciting for the growth and development of Polygon as a genuine gaming hub. And within his statement, he says he's fascinated by blockchain app development and beyond thrilled to enter the space of Web3. And he suggests in his role here, he's going to be focusing on growing the developer ecosystem through investment, marketing, and developer support, and bridging the gap between Web2 and Web3, and will be leading Polygon Studios across gaming, entertainment, fashion, news, sports, and more. So this is a rather wide scope, and YouTube have really been pursuing the streaming market here, so maybe he's going to come with similar ideas for Polygon. This is super exciting for the long-term health of the Polygon ecosystem. Back in July 19th, when this news broke, they actually launched Polygon Studios and had like a $100 million backing for this investment. And just 6-7 months later, they're now headhunting the best in the business from YouTube itself. And I think this goes a long way to speak for the long-term fundamentals of Polygon, but also the blockchain industry at large. Even in bearish times here, you're seeing where the human capital, all that brain power, is centering around cryptocurrency. Which brings me on to this tweet here, which is also worth remembering from Elon Trades. Remember that all of these news outlets are bought and paid for. Negative news cycles are ran for a while. The big boys fill their bags, then they reverse sentiment when the timing is right. But remember, they can wait this out. Can you? And we've seen a flurry of negative sentiment here. Of course, some of this warranted, geopolitical tensions, etc. And of course, the stock market selling off. But you've got to think that the media is highly manipulated. We've seen this with like outlets like Reuters flipping their sentiment on crypto on a dime, clearly bought and paid for. And so this just leads you to think long-term investment strategy, not day-to-day trades. Invest for the long run and you will be handsomely rewarded from this industry. So into the chart here, BTC 37,800 bucks is actually pumping quite a bit here, which I'm a little bit uneasy with. I'd rather we were flat going into the FOMC and then that provide the catalyst rather than be pumping into the meeting. You know, the market makers could be playing games here. They could spike things going into the meeting and then immediately wipe out all those longs. That would not surprise me whatsoever. There's going to be a huge amount of volatility today. I would not want to be trading this market or making any rash decisions based on the outcomes here. I think it's best to have a breather, think about things, sleep on it before making changes to the portfolio potentially. In terms of a relief rally and a major pump, the next targets will be up to around the 40k region around here, and then all the way up to around 45, 46k. A lot of confluence through this region around here, and that is somewhere that a lot of analysts are suspecting if we do get a good pump, this would be the area where we would actually get some significant resistance and potentially post that lower high and then start trending down once again, as this is on a macro scale a very much downtrend bearish looking chart right now. So until anything changes on a longer term time horizon, things are trending down here. Let's not beat around the bush, but we are hoping for a large relief rally, as we really haven't seen anything since the start of that December sell-off. One thing that's a little bit worrying here on the Crown crypto app is the amount of global open interest. You can see that it has been coming down, but it started to tick back up again. People really can't help themselves but long this bloody market. We got interest down to around 9.5 billion from around 13 billion just a few days ago, but now it's started to go back up again. all the way up towards $10.5 billion. So certainly there are people trying to long the heck out of this market. You can see the leverage ratio here on Crown's app is ticking pretty damn high once again. And typically when this happens, we have a sell off and prices come down to wipe some of that leverage from the market, which is typically from people just going too hard with those leverage longs. So caution advised throughout today. I think this is going to be super, super volatile. And on top of this, we need to really see and digest what Jerome comes out with a little bit later on. So all eyes on the FOMC today. It's going to be talk of the town. Tune in and listen to it for yourself rather than just taking all the information in on a second-hand basis. So I hope you enjoyed today's video. If you did, slap a like on it, comment down below, guys, and I will catch you in the next one. Goodbye.